Well, hello everyone, and welcome to our special presentation on becoming a broken wing butterfly master and how to produce the most consistent results through all market conditions. Now, before we get going, let's quickly get our disclaimer information out of the way. Let you know the presentation is for educational purposes only. We're not broker dealers or financial advisors, and we're not making any specific trade recommendations. Also, please be aware that your risk in trading options is substantial, and please make sure you are aware of all your risks prior to placing any trades. Also note that in the presentation, we will be doing hypothetical computer simulated trades. They're believed to be as accurately represented as possible, but keep in mind that live results can vary from simulated results for many, many different reasons. So myself, I'm John Locke, and Stephen is here also. Hello, Stephen.
Hey, John. Hey, everybody.
Hey, and today we're here to guide you along the path to achieving consistent trading results. So now, one of the things that I'm guessing is that for a lot of you, this is probably not your first webinar about making money with broken wing butterflies. And the first thing I want to mention that if you failed in trading these types of trading structures in the past, that it's not your fault. The reality is that there's a lot of information and misinformation about trading, and it can be pretty confusing when you're trying to navigate your way through that process. In fact, there's so much information that many times the sheer amount of information overloads us, and we literally, that process literally keeps us from achieving the success we desire. We think we need more and more information, but a lot of times that's not doing anything but slowing us down. So, if you've been concerned about this in the past, concerned that you just can't succeed with trading, I want you to know that I understand that, and I'd like to put those fears to rest today, and just reassure you that really, I'm sure you can do it. Okay, you just need the right people to explain it to you. So realize that many people who sell trading programs and trading services and alert services and things like that, they want you to think that all you need to be successful is to, find the right trade or follow their trading alert service. And I'm here to tell you that they're wrong. They all have their own reasons for wanting you to think that, but the reality is it's not true. And if you've ever thought that these services wanted you to fail, you might be right, because they don't benefit from you succeeding. Most of these follow-along services and things like that, most of them would rather keep you dependent on their trade alerts or their next miracle trading strategy that you see. They don't necessarily want you to become a competent trader on your own, because then, where do they make their money? The difference with us is that we actually care about your success. We truly want to see you living the life of your dreams. So that's what we're here for. I know that many of you have a dream to become a confident, competent, capable trader who can rely on himself to be profitable regardless of what happens in the market, regardless of what happens in the news. Now, when we get to this level, and which we certainly can, this doesn't mean you're going to win every trade, but it does mean you'll understand what you're doing. And you'll understand what you're doing to the extent where you'll know what to do to remain profitable when future changes occur in the marketplace, as we all know, which most of us has probably seen this year, right? And over the last few years. And we also know that those are going to happen in the future at some time. So our objective here with our presentation today is kind of twofold, right? So for beginners, what we'd like to do is drastically reduce the amount of time, money, and effort it takes you to become profitable with trading and to gain the understandings you need. And for our more advanced traders, our objective is to reveal the tools and understandings you need to finally become consistently profitable. And since we're here to help you, one of our goals in the next 60 minutes is to get you to realize that you're not going to achieve consistent results over long periods of time simply by following a set of rules, nor is that going to happen for you following trade alerts. In order to get those consistent results that you desire over long periods of time, you need to learn and to adapt. And in order to adapt, you need to gain a deep understanding of your positions based on or how they relate in different types of market conditions. And this understanding is the key to achieving the consistent results you desire. And today we are going to show you how to gain that understanding. Realize that once a long time ago, okay, I was an aspiring trader too. And actually, it wasn't all that long ago. I started trading in, 2005, I think. But I was an aspiring trader, and I had the belief, like most of us do when we start trading, is that all I had to do was find the right indicator or the right trade or the right trading service. And I thought that that would solve all of my troubles. As a result of that thought pattern, I tried many, many different types of trading. I tried following other people's trading rules. I tried creating rules that worked flawlessly in back testing. And I even tried alert services and trade alongs. And yes, through that process, I did have periods of success. But every single time, the market eventually changed, and whatever trade or service I was following, they had these periods of failure, right? Sometimes substantial inconsistency in what I was getting for results, which when I think about it now that I'm more experienced, that makes perfect sense, because now I understand the extent of variables that the market can throw at you. But at the time when I was new, this insight was shocking. I mean, how could this strategy or alert service that did so well in the past or did so well back testing or had this certain track record, how could it fail? But it did, right? One thing after another that I tried continued to fail repeatedly. And the reality is that you can't argue with the facts. Realize that for the most part, things that worked well in the past on back tester, these things are fitted for the past. And also realize that the future at some point will very likely be different than the past, which will inevitably lead you to different results. Therefore, you can't simply rely on a trade or an indicator if your objective is consistent profits. Because in order to get consistent profits, when things change, you need to be able to change and recognize those changes and change as well, right? You need to be able to adapt to those changes. Otherwise, if you don't do that, you end up in this loop of trying the next trade or the next trading service again and again, where in the end, you have a lot of new information, but you're really no further along than you were when you started. I know this because when I was new at trading, I was in the loop too. So the question becomes, why do we get stuck in this loop? Well, it has to do with something that we call in the coaching business the motivational triad. So our natural tendencies as human beings, our unconscious brain, okay, it wants to seek pleasure, avoid pain, and conserve energy. Those are the three tips of our triad. We unconsciously want the pleasure of winning without the uncertainty of losing, without having to expend the energy to monitor what's happening in the marketplace and make judgments and make decisions that could potentially result in pain or that are uncertain on whether they will or will not result in pain. This leads to a desire to follow rules, to have an indicator, or follow alerts where we can create what I call an illusion of certainty, right? It's not really certainty because you're depending on somebody else's rules, or maybe even your own rules, or somebody else's indicator, or maybe even your own indicator, but you try and back test it like forever so that you create this illusion of certainty, right? And you do that through winning back testing or following those indicators in a way where we don't need to go through the work of paying attention to the market situation, and we don't need to make those uncertain decisions that could result in pain. Now, people say, well, what's the problem with that? Well, the problem is that the future, while it may have some similarities to the past, the future is different from the past. There's different types of market movements. Those movements are timed differently. The implied volatility situations are different. There's new news and different types of things that are going on in the marketplace. There's technology that drives changes in the marketplace. So we have all these things, and the future is going to be different. Therefore, if we want to win most consistently, we must be able to adapt to whatever differences the market happens to throw at us. So here's the secret. This is what turned my trading around. The thing that did it is when I finally accepted that there was no set of trade rules or there was no alert service that was going to allow me to sit back and rake in the money consistently forever into the future. It simply didn't exist. That holy grail didn't exist. And I had to really internalize it. And I realized that I was going to need to learn when certain things were the right thing to do and when certain things were the wrong thing to do. You see, I get a lot of questions when I'm teaching students about broken wing butterflies and trading. Is it better to have more narrow wings or wider wings? Is it better to put a vertical here or a vertical there? Is it better to be closer to expiration or further expiration? There is no one right answer to that question. Everything depends on context. And finally realizing this is really, and starting to pay attention to the context is really where my trading turned around, when I was willing to make those decisions. So today, if you're open to putting your judgments aside, Stephen and I are going to help you begin that process as well. So what I'd like to do is I'd like to bring in Stephen now, and he has a little bit he'd like to talk to you about. And hello, Stephen.
Hey, John.
All right. Now, you have your own PowerPoint.
I do. Thanks, John, for laying down the foundation and for this track and what we're going to talk to you about and let you know what you're going to get out of this. And some people are familiar with the broken wing butterfly and some are not. But what John was trying to point out is don't get overly caught up in structure. You know, he's speaking more to the higher level, sort of the performance, the mental part of the game. Because when you're always depending on somebody else, you'll have success early is usually the cycle, right, John? Then you increase your size, then you get whacked, and then you go find somebody else. So
Absolutely.
What this program really is to me is about taking ownership of your trading, cutting out the dependency. And the only way to get there is through knowledge, obviously, and really digging in and understanding how these trades work. And for those of you who aren't familiar with our memberships, we have a success blueprint or a roadmap, if you will, for how you go from, say, a total beginner to a master trader, and it's set up through 5 stages. And obviously, stage 1 talks about the basics about options, introduces some very simple trades that we introduce so people get familiar with things. But then once you get to about stage 3, this is the kind of trade, or excuse me, the kind of course that you really have to internalize. And I was talking to John earlier, I would say that, you know, if we had a prerequisite or a required course before we promoted people to the pro level, this would be it. So I just want to preface with that.
Yeah, absolutely. It really helps with the understanding of what you're doing.
Yeah.
Yeah.
And so, you know, the first question people have is, why this course? Why this video series? Well, the BWB is really the best learning tool for this style of trading, this campaign style of trading, which, you know, John has obviously really popularized and other education sites have as well. You know, just anything that's using some form of complex spread configurations. This is the basis. You know, it's a butterfly, broken wing butterfly, 20 points approximately below the money. Boom, that's it. So if you're able to grasp the concepts and even the detail of this, then your foundation is really set. And, you know, just to further that thought, it really teaches you how to learn how to adapt your trading to what you're trying to achieve. You know, are you trying to go for broke? Are you trying to minimize risk? Are you trying to just create a very consistent equity curve? You know, whatever it is, this program is going to teach you how to achieve it, how to take ownership, how to customize the trade to achieve your objectives, as opposed to, well, I saw this guy do something on YouTube and, you know, I don't really know all the variables, but it seemed to, you know, win money the last 6 months. So that's what I'm going to do. We want to move away from that.
And yeah, or I'm trading these trade rules and I don't know why it's not working in the marketplace right now.
Exactly. But I don't care because I'm putting money in my pocket. That is exactly how you do a face plant. Because as soon as the market changes, You're, like I said before, you're going to have increased size, and the market's going to change, and it's going to get ugly fast. So, really, this is a probability business, right? We're in the risk business as traders, and so understanding these tools, this foundational trade is going to increase that probability of success. And learning the true mechanics of the butterfly structure, like John touched on, where do I put my shorts? And I'll this will be a recurring themes throughout this presentation, but it's the mechanics of how do I adjust, where do I adjust, when do I adjust, under what circumstances, the mechanics. And so really just to reiterate, this is foundational. For John's legacy trades and some of the new trades that he's produced in the last year or so, if you understand this.
But not only my trades, right? So this would apply to any broken wing butterfly style strategy, or whether it's something you develop on your own, or you see for sale anywhere.
Right. So this goes back to where I was saying this would be kind of like a required course, because once you get this, the X4, the V32, the M3, the M34U, the Rock, John's other trades becomes so much easier to learn and understand. And like John said, even other forms of BWBs and other people's trades. This is just that basic understanding. It's like when you're trying to learn a language, right? If you learn the vocabulary and the tenses and the nuances, you can say in Spanish, it's not that hard to go learn French.
Right.
So this is pretty similar in that sense. So
we're often asked the difference, right? What's the difference between an M3 and an M3.4U? What's the difference between that and a Rhino trade or something like that? And the reality is, if you understand these concepts, you know intuitively what those differences are, and you can answer the questions yourself.
Yeah, and quite frankly, all those answers are in this course to those questions that you just had. You could watch this course and understand what those differences are. So for those of you who may be completely new and not sure, I just wanted to point out, this top risk graph is your classic broken wing butterfly, right? So the upper wing is broken, as we say. It's not symmetrical with the lower wing. It produces a flat T+0 line. And then this lower chart is some variations of that BWB. You could have more longs, or your upper longs split. You could have a condor type trade, which is this right here, where you have your shorts split, or you could have kind of a ratio form. But as you can see, they all produce a very similar T+0 line. But when you come to the decision of which one do I go with, it all depends on context, like John says, and your objectives. What are you trying to achieve? These will all react a little bit different given the market environment and your goals. So what exactly are you going to learn from this series? Again, you're going to develop a structural understanding of the BWB for any market situation, not just for what's working now, not for what's just winning today. You're going to be able to adapt your trading to when this market normalizes, when and if that happens. And we go back into like a 2013 or 2017 kind of market, very low IV, very expensive butterflies. How are you going to adapt your trading? Well, once you understand the foundation, you'll be able to adapt to it. You'll learn the why behind the what. I was always like that when I was first learning. I was like, well, why are we doing that? Why don't we just roll the shorts all the time? Or why are we rolling the tent? What does that achieve? And a lot of people don't get those answers, or worse, they don't even ask those questions. You're going to get that through this course. You're going to be able to develop those if-then market scenarios, those if-then statements. If X happens, then I can expect Y. Developing our probabilities. What's most likely to happen? What are my trade-offs? And you can be confident in how the position is going to react if what you expect happens, and if what you expect doesn't happen. You shouldn't be surprised either way, right? You've got both scenarios in your mind. And then lastly, you'll be able to internalize, like I said, all the relevant trade-offs of each action you take. So for every action, there's a reaction. So for instance, if I'm constantly rolling down the upper longs to take out risk to the upside, for example, in a BWB, that's all great and dandy as long as the market continues up and I can't lose to the upside eventually. But the trade-off is I'm exposing my downside risk. And you have to recognize that and say, what actions, am I okay with that? What actions can I take to inoculate that risk if I see fit, if that's part of the objective.
And what other types of adjustments might be more beneficial for me in this situation too.
Right. Yeah, exactly. Maybe you don't want to do what we call risk off only, where you roll down the upper lungs. Maybe it's something else. So we'll touch on some of that later, but the themes here is, it's all about, it's a game of risk, probability, and trade-offs.
Mm-hmm.
So what exactly is the course? The course is 4 videos and over 6 hours of training and very detailed content. John goes into as much detail as you want. I don't think he left any stone unturned as it relates to this. So every question you could possibly have or need to have is really addressed in this. And I'll mention this now, John, about the calendars. John is, I believe he's still planning on doing a video on how we can combine this trade with calendars. Do you want to talk to that a little bit, John?
Yeah. So what we have in this particular program, is we have this course that I've put together a couple of years ago. And of course, we have a new implied volatility environment in 2020, or since 2020. And I also wanted to discuss more on, we start talking about adjustment strategies and broken wing butterflies. I wanted just to discuss more about combining calendars with broken wing butterflies. And on top of that, I know people who take the course probably may end up with a question. I mean, we do the best we can to cover every possible topic and question you might be able to have, but there's always more, right? Some people always have, sometimes there's always more questions. And what we're going to do with this particular course is, and we'll talk about this a little bit later, but give you a little bit of time to watch what's here. And then I'm scheduled for April to come out with basically what I'm going to call a 2021 update that's going to include all of that material.
Yeah, that's great. So just really updating the original to match the current environment, which is quite unusual, right? We haven't really seen these kind of these skew structures and elevated volatility for so long.
Well, you can't back test it, right? Because
it's never happened. Tell me a year when this happened, right?
Right. It's never happened before. And part of the thing about understanding is when something that never happened before happens, if you truly understand what's going on and the dynamics of what allows your trade structure to make money, or what its problems are when things go bad, if you truly understand that, you can take something completely new happening in the marketplace, realize that something different is happening, and then adapt what you're doing so that you can continue to be profitable in the marketplace. And that's what it's all about.
Right. That really is. I mean, being the ability to identify when there's been a change and one that's going to be consistent. So the other thing that's the huge piece of this course are all the different adjustment strategies and tactics. I mean, it is the full-blown laundry list of things you could possibly do. And John discusses in there, like we said before, the trade-offs, what might be your objectives for each tactic. What do you gain? What do you give up? The benefits and drawbacks. And then, of course, the deep dive into how time, IV, trade configuration, wing widths, and the adjustment strategy, all how they impact the position and react in any given market condition, that is the meat and potatoes of the course. And once you understand that, you're really off and running in terms of this style of trading, like we said before. And then ultimately, this is going to provide an easy methodology for you to construct your own trades, meeting your own risk objectives, your own return objectives, and go back to that idea of taking ownership of your trades. You want to be able to develop your own trade ultimately, which once you go through this course shouldn't be that hard to do.
Exactly.
So specifics, what's exactly in the program specifically? So it's broken up, I said it's 4 videos, and the 4 videos are broken up into entry, which, I think that's over an hour and a half of material just on entry.
Right.
And all the different variables and machinations that go with that. Upside adjustments, downside adjustments, and exits. Well, that all sounds like pretty simple pillars to discuss. Like I said, John goes into great detail into everything that you'd ever want to know on each one of those areas. So here's an example of some of the stuff, the detail we drilled down into as it relates to entry considerations. You know, the configuration of the BWB, or maybe it's a broken wing condor, whatever it is, that risk profile that I showed earlier. How do
Or
you
butterfly
want,
call.
or a butterfly call like the M3, right?
Yeah, yeah.
How do you want to construct that, and how to, you know, what's the decision tree you go through to arrive at that? You know, what are the objectives? What is your risk? Maybe you're applying some subjectivity, some TA, maybe you're not. Talk about wing width, wing size, so on and so forth there. And then time, you know, are we doing it far from DTE, close to DTE? What does that mean? What does that give me? What is, and I'll have a matrix that I'll show earlier. But I just wanted to kind of lay out how John starts, you know, with a broad topic, the 4 track sections, and then just really drills down. You know, the trade parameters of the planned capital, profit target, expected loss. I mean, there's just,
Well,
and he really,
you know,
yeah.
over the years, I've been asked questions. You constantly ask these questions.
Right.
You know, am I better off to be closer to expiration or further from expiration? Should I buy with my long strike at the money or my short strike at the money? Or which, you know, what wing sizes should I use? All this other stuff always comes into play. And the reality is there's pluses and minuses to all of them, right?
Right. I was going to say one thing that really pops out is he'll also tell you what's the most relevant thing. Like, I'll answer your question and, you know, here's the answer, but, you know, trading is confusing enough, or can be. You're just bombarded with information, and so it becomes a game of being able to determine what's relevant and what's less relevant. And John does a good job of that, saying, you know, that's not your biggest concern, or this is not going to have the biggest impact on the outcome of this trade. We didn't need to know which one of those variables are.
Yeah, I think that's a good point too, Stephen, because so many people get caught up in certain details that really don't make a difference, and they ignoring the stuff that makes a big difference.
Oh, and I was there for a long time. You know, I'm a detailed oriented person, and maybe even subject to that perfectionist thing, which is kind of a misnomer anyway, right? But engineers and exacting type minds can easily get caught up in that and not being able to discern what's the most important variable, what's the variable I need to optimize in this specific situation. So here's kind of a sneak peek into some more detail of what's in this program. The topic of entry duration, right? So should I enter with a lot of time in the trade or very little time in the trade? And just from a general standpoint, you can see how I've outlined, you know, the conservative to the more aggressive. Some people that may be intuitive, some people it's not so intuitive, right? Like, what's sort of in the middle? You know, we say it's somewhere between 20 and 50 DTE, but even those timeframes that I'm posting here really are subject to the context of the market. Like 70 DTE in this market would be like,
that'd be crazy almost.
Triple concern. Like, what are you even doing? Because you're getting the same risk profile, for instance, at 70 days that you could get at, I don't know, 50 now, maybe less.
Probably even closer than that. Yeah, some of our 7 day,
especially after yesterday. What did we say? Butterflies were, I don't know what,
$4, 20 days to expiration.
Yeah.
Yeah, which normally they're $10, it's 56 days to expiration.
Right. So even this, you know, even when you post something like this, it's about context. And at the time when the program was developed, that's what
we had, right?
Yeah.
And so that's kind of what the update's going to be about too, is talking about that.
Right. And you'll be able to identify, okay, how has that changed? You know, one easy way is price. What am I paying for this butterfly or broken wing butterfly at 56 days or 50 days, whatever it is, and now all of a sudden you notice that they're on sale, so to speak. That's a change. That's market generated information. So another topic, entry configuration. Do we enter as a BWB, a butterfly with a call, a broken wing condor? Is it best to enter in high or low IV? Better enter on a pullback or where the market's running away from us? Well, there's trade-offs with all those things. And again, John will point out to you what's more beneficial or what increases the odds of success of the trade. What's the optimal wing width? Do we lean it bullish, neutral, or bearish? Again, that all comes back to what's your objective? What are you trying to achieve? And then if your answer is always, I want to make money, that's not what we consider an acceptable descriptor of an objective, right? You're in the risk game, you're in the probability game, you're in a game of trade-offs. Those are your objectives should be based around that and not simply just the outcome. Because I
Yeah, well,
know,
that's true with any type of goal setting, right? If you look at any advanced goal setting course, I mean, you can't. Your objective isn't I just want to make money. You have to break it down to specifics. What's your
right,
specific objective?
right,
What are you willing to give up for that? Right,
right.
that type of stuff. Yeah.
And that's hard being in this business because the results are so in your face. I mean, it's just so well, it is what it is, right? That's what we all focus on. It's so tangible and visible. It's difficult sometimes to focus more on the process and the details and the underlying objectives of the actual trade and not focus on those outcomes. So another section, upside adjustments, the strategies and the optimal time to use each tactic. Now, John goes into great detail and uses some acronyms to try to label some of the tactics. So for instance, RO is a risk-off only upside adjustment strategy. And if you're in a BWB, that would simply mean you're rolling down the upper longs if the market is moving up and you're wanting to take off risk to the upside. So that would be a vertical spread to do. You could do, but of course you could do the verticals anyway, right? You could do them at the shorts, you could do them at the lower longs, you could do it in the middle. But I think what's critical here is how John has outlined in an acronym manner, which I think was kind of cool, of all the different things you can do. And of course, the trade-offs with each, right? So gradual rock transition, that may not mean anything to anybody else, but that could be something where you're trying to add tent out in front of the position and not roll the existing position per se. But these are all the different things you could do. And this is not the most exhaustive list. I mean, it is a very exhaustive list, excuse me, but I mean, there are other things you could do. And of course, the counters, like we talked about, John
Well,
is going to produce
just to
later.
go back, right, Stephen, one of the things I do a lot of times, especially in our live seminars, is I'll come in and I'll take a look at a trading strategy and I'll tell them when it's going to win, when it's going to lose, how it's going to react to the marketplace. And it's because I've categorized the different types of entries and the different types of adjustments, and I put them together, and I know, so when someone comes out with a new strategy, I can compartmentalize that strategy and know exactly pretty much where it's
Right.
in the marketplace without having to
Right.
go back and test it and all this other stuff.
Yeah, exactly. Yeah, it gets to the point where you just read it. You can look at the trade and read it, and you don't have to like play it out and back trade it to know if it wins or not.
Or when
Just
it's going to win and when
intuitively
it's going to
know.
lose, right?
Or when it's going to lose. Yeah, it's intuitive. So this touches on, again, John talked about earlier, with the common questions that you always get, which are all good questions. Does it matter where I place my shorts? Does it matter where I do the vertical adjustment? What if the market crashes tomorrow? How long until the trade hits profit target? Should I roll up the tent or keep it in place? What if the market runs away from me? I mean, these are all quality questions, and the program addresses them very directly. And again, the theme with these tactics matching up with whatever you're trying to achieve, your objective, there are going to be trade-offs. And John speaks to all those. There are some things are more general. They're going to be more beneficial in most markets. But then when you get in specific situations, you're going to be armed with the ability to make a better decision because you understand how each tactic reacts in a given market. So what I did is I made a couple of matrices as an example of what you could do once you go through this program and build your own matrix to kind of map it out in your mind what, say, each tactic or each context that John's talking about and how a position may or may not react. And this kind of helps sort of build a map in your mind. So this would be an objective and action impact matrix, right? So depending on your objective, what are some things I can do to the position in order to achieve the objective? And then, but then what's the trade-off? What's the other side of the coin? So for instance, if I'm in a trade and I want to minimize losses, be conservative, right? Well, you can enter the position with the short strikes further back at entry. It's further away from the market. So it's going to have a lot of downside protection. Another thing you can do is roll in the upper longs and the lower longs. And for those who don't know what UL and LL is, I got a little key down in the lower right. Just take advantage of the acronyms. squeeze the position from the upside and the downside, just making the tent smaller. Now, what are the trade-offs to doing that? Well, you're not going to make as much money. You're going to need a lower profit target. You're going to have a higher win rate, but your average winners are going to be less. So if that's your objective and you're okay with that, then these are some things you can do. And certainly this is an example. It's not exhaustive. There's all sorts of other things you could do. Let's pick another one, John. So let's say you want a position to be less sensitive to volatility. Well, you could do a butterfly with a call configuration. Maybe you don't want to be in, say, a condor position where the shorts are split, because that's going to be more sensitive, which keep the short strikes the same strike. Now, what's the trade-off to that? Well, it's that kind of a position, while it's less sensitive, maybe it's going to gain less than a broken wing condor. Because give you a quick example, if you're, generally speaking, if you're in a broken wing condor versus a BWB and the market stalls, that condor is probably going to pop in value a little bit faster. So that's just an example of that trade-off. Now, sometimes you'll be right, sometimes you'll be wrong, but what you want to do is be able to recognize and identify what am I trying to achieve at this point in the trade, and what can I do, but then to achieve that objective, and then what are the trade-offs to that? Did you have a comment on that, John?
Yeah, no, I was just saying absolutely, because anything you do in trading, any choice you make is going to have a trade-off. It's going to have a benefit for drawback, and you want to know what those benefits and drawbacks are.
Right. So here's I'll just move to the next slide. Here's another way to put together a matrix in a different way. Similar information, but now you're looking at it instead of from the objectives, look at it from the different variables or tactics, right? So if I want the short strikes closer to the money, what does that mean for the trade? Well, it could mean that you're more likely to draw down if you have a fast move down in the market, especially right after entry. However, you're more likely to make bigger gains if you're more on top of the market. And generally speaking, it is a more aggressive posture. Let's say if we want to be far from expiration, what does that variable mean? What's most likely to happen in the position? Well, it's going to be easier to manage, because when you start a trade at 70 days versus say 20 days, there's not going to be much to do. The Greeks aren't going to change much. The T+0 line's not going to start popping. The gamma's not going to change. So you might it's easier to manage for some people who are attracted to that, because you just don't do anything for the first 15, 30 days of the trade, depending on what it is.
Right. It does. You can see that dynamic play out in our X4 trades versus our rock trade, for example.
Yeah, right.
32. Yeah.
Right. Now, in the beginning, that's going to give you, for setting up the position farther from expiration, a higher DT is going to give that position a larger range for the market to move around. You don't have to be as on top of things. And it also provides you the ability to make profits above the tent. Now, it's going to take some time for that to happen, but you don't have to just aggressively stay up with the market if it starts running away from you, if you've got time in the trade.
It can go way outside your tent, particularly the upside, and it's not really an issue a lot of times.
Yeah. So those are just some examples of something you could do as you go through the program, is get out a spreadsheet and kind of build something similar to this, so you have kind of a menu, if you will, of objectives and variables, and you can just refer to it as you're building your trade or trading your trade or creating your trade plan. And so this is my best effort at sort of a dashboard or a cockpit, right? You've got all these sort of confusing looking instruments, and you don't really know what they're trying to tell you. They're feeding you information. But once you really understand the foundations of the broken wing butterfly and all the variables and the trade-offs, these kinds of dials, these kinds of sets of information will all make sense to you. And it's just a matter of you're tweaking the dials on the trade, so to speak. You're tweaking the information in such a way that it achieves the goals and the objectives that you're trying to get to. So that
that's interesting. Just something just came to mind, right? You're going to want a different set of readings on the gauge if you're trying to take off than you are if you're trying to land, right?
Yeah, exactly. And like I said, when you first look at this, it's like, I don't know what any of these gauges mean. I don't know what I'm supposed to do. When is it red line? When is it not? But once you go through this course, you'll be able to read what's happening in the marketplace and adapt to it in the appropriate manner. Next, I thought we could do, John, if you'd like, if we have time, is I've got a couple of trades loaded up in the analytical software, and we could just look at some different considerations, and then if
let's give an example of different considerations. That'd be great.
Yeah,
that's a good idea.
And then I've started the trades, and I'll walk people through it, and then in the middle of the campaign, if any of the participants want to say, hey, what is it that you're trying to achieve at this point in time, then John and I will just kind of off the cuff talk about what we could do to the trade to achieve that objective.
Sure.
So
that sounds great.
Here we are in the middle of last summer in the Russell. It's just some random date I picked. It's 36 DTE, again, somewhat random, but kind of in the middle of the road, not too high, not too low DTE. Here's a look at the price chart. We had that big move up. We're kind of consolidating here. Not really taking a huge opinion, but we are making higher highs and lower lows. We could take off, but so we'll set up a BWB, right?
Mm-hmm.
So here's our upper wing. Here's our lower wing. We've split the upper shorts to get us a delta that's a little bit positive, because we've got a market bias that the market's going to go up, but not just scream away. So as you can see, we do have a little bit of risk to the upside. Obviously, this is where we're willing to lose, is down here, but we could take this risk out a number of ways pretty easily. So let's just see how this trade goes for, let me see when I quit on the 27th. So
right. So some questions people might have, right, is why don't you put it? Why didn't you start it with the long strike further behind the money, or behind the money? Why?
Yeah.
Why did you go with 60-point wings? And I don't know how wide you are.
Yeah, it is right. So it's a 60-point lower wing, and starts out at a 40-point upper wing, and then I adjusted these to dial in the delta that I wanted. So if I put them all up here at the highest strike of 1490, it only gave me a delta of +3. I'm a little bit more bullish.
And you could have adjusted that delta in multiple ways. You didn't have to do it that way, right?
Could have done that.
Yeah, you could have done that. You could have done the other way, though, the other direction. Right, you could have moved some of your shorts back. You could have bought a put. You could have done a lot of different things. What are the consequences and benefits to doing each one of those?
Right. So let's just go. I'll pop to the next adjustment. The market really didn't go anywhere. So here we are, 11 days in the trade. Got a nice little profit in here. It's just, we don't really have a profit target, but we're just trading it. So at this point, John, if anybody wants to step forward and say, if you were in this trade and you were going to continue to trade it, you got 25 days left, what would be the objective at this point? So for example, do you want to make a maneuver that protects this profit? Do you want to make a maneuver that takes advantage of the trade if the market shoots higher and comes out here?
Well, let's see. We're up what? We're up how many percent here? More than 10%, right? We're
on actual risk, we're up 15%.
So maybe that's a good profit target number, right?
You could just take
it
off.
In the program. You could take it off, or if you wanted to be a little more conservative, what would I do? What would I do if I wanted to be more protective of my profits at this point?
Yeah, I mean, you could any number of things, right? So we talked about this before. Take out risk. Could be even more aggressive than that, right? You just squeeze this together. See how this line is rising, and the green would be after the adjustment, and this line is rising. So we're taking risk out of the trade. Now,
we're reducing gamma, right?
Reducing
gamma, taking risk out. Now your delta's you had a bit of a delta shift, but you could fix that by bringing more of your 1380s up, right?
Yeah, right. You could do something like this. You know, if you want to stay more positive delta, if you wanted to get neutral, you could do that.
Right.
You
But
could
you
put
could play with
something.
those sides. But you can see
Yeah,
the risk out of the position. The gamma's flattening out. You're going to hold much more likely to hold your profits, and you still have potential to make a little bit more.
right. You could
If that's
scale
your
out.
objective.
Yeah, you could take part of the half the position off, right?
Right.
But recognize what the trade-offs are, right? You're not going to gain a whole lot more. I mean,
Right.
you could get some. It could come down to, you know, I've in 11 days in the trade, I've made good money. Maybe I take the money and run and go put on a new trade with a little more time in it.
Right. And that may or may not be your objective, depending on where the market's bringing the money in recent market conditions. Right. And the other thing too is if you want to make more money, you wouldn't want to do that. Like if your objective was to maximize your gains,
right. So
you wouldn't even be interested in that.
Let's just say that that's what you wanted to do. Throw out an idea of how to take advantage of that.
Right. Especially if you're considering a market stall, you might want to actually get more on top of the market.
Well, you could add some structure. You could roll it up. You know, you could do something like this, right?
You put calendars under it.
Put calendars under it. I mean, it just all depends. And this is what you do, by the way, in live trading. That's probably not as high as you want to go. Like if I was literally in this trade, you know, an hour before I know I'm going to adjust, this is what I'm doing. I'm getting in the analytical software and I'm playing around with some ideas. You know, maybe I want to add 10 out here, and then I'll come over here and see what the T plus zero line projections are. That's pretty nice, right? If I don't think the market's going to run away from me, it looks like that T plus zero line is going to pop up pretty nicely in this direction.
Absolutely.
Now, what are the trade-offs to that, right? That's what we talk about. Well, I got a little more capital in the trade right here, right?
Yep. Which you can fix, by the way, which
has
a trade-off.
Right. I mean, that's just, it goes on and on in that way, right? So
right.
How would we fix that, right? If you want to take risk out of the trade, roll up the lower longs. Now see, there's not much of a difference there.
Actually, there is no difference. You reposition some of the risk to the up.
Yeah. So I took this capital and effectively put it over here, that's a pretty smart move if your objective is to get more out of this trade. So I think that's a pretty good example of what you could do with a trade like this at this point in time. There's all sorts of options. Now, let me be clear on this point. This should be all determined in your trading plan before entry. It's not, I stick this on, I'm kind of bullish, and oh wow, I've got a nice profit. What do I do now? That's not how we want to trade. You want to have it in the trading plan and already defined and with all your if-then statements. Now, in the beginning, you're not going to cover all the bases and you will be faced with a situation you didn't consider. That's fine. But what we don't want to do is get into a trade and not have a plan for the scenarios that most of the scenarios that are going to play out in front of us. So if you want to move away from this, John, we got a little time left. I can show an SPX condor with starting at 18 days to expiration.
Sure.
To contrast with this.
Yeah.
So that's very different, right? In the sense it's a different asset. It's half the time. This was a 36-day trade. This one is an 18-day trade. And it's a condor. See, is that going to take me to it? That's the BWB. I want to go to the condor. So see how this trade, you know, first thing my eye always goes to is the risk reward. You know, what does that kind of look like? And you can already see how this T plus zero line is pretty different as it related to the Russell, but probably most of that change is coming from the fact that this is just an 18-day trade. It's not much, the gamma is higher. There's not as much time in it. So your objective in this might be, let's look at the chart. Hey, we're kind of consolidating. Looks like we might break out, but I think we're going to consolidate longer. So I'm going to set this up with a little bit of positive delta in case we break out. I'm on top of it to take advantage of a stall. And
Right. You're going to gain money much more quickly, but you also have that price movement risk.
Right. I mean, you get a quick move down. Let's see, what's 100 points, 31, 15. You know, you're not in this kind of a trade that'd be close to max loss, but you wouldn't be, it's certainly not devastating. So let's walk through this trade day by day. I want to have people focus on how this trade changes, this T+0 line changes. See how it popped right there, day one? Market didn't move a whole lot. That means we got good pricing. It was a good entry day. Now this was just random. It wasn't like I was going back and watching pricing, but you can see how if you focus on your pricing and you know your pricing, you can get a value pop in the first day. And of course, this being lower DTE, that also comes into play. Like John said, you're going to gain money pretty quick. So let's go to the next day.
Right, that depends on your locality to the tent too, but that's for sure. Yeah.
Right, now we're moving up a little bit. You know, maybe we're breaking out, maybe we're not. We're still holding some positive delta. Trade's kind of hanging out. It's gaining some value. I just want to see when I adjusted this, or how far did we went? The 27th, so not much more. I just like this going day by day, John, because when I'm back testing, this is where you learn the most, right? How is that T+0 line changing from day to day? And that's the power of the software.
Yeah, and then noticing it changed, then figuring out what happened after it changed.
Right. So
Really
here's an interesting, yeah, exactly. So here's an interesting move. We were out in front of the tent. Now we moved inside the tent. You're like, oh, wow, I don't like that big ledge over there. Well, let's look at our charts. You know, if you're using charting, is it time to panic? Do you have support? You know, in this particular instance, we said we felt like the market was going to stay in this range. So you may or may not like this delta. In this particular case, we're going to go with it. Now notice that the other trade was up just as much or more. Right. And I know in the other trade we were 11 days in, but it had more time. Mm-hmm. So that's something you have to recognize and understand. You know, it could be that was positioned better for that particular market, the Russell. It could be that the skew structures in the market in the Russell were more favorable and the value came in, because there are some differences in the two assets, right, John, and the way Absolutely. The value comes in. So here we are in the middle of the position. We're gonna roll with it. We don't feel like the market's going to go down. So here it is, 11 DTE, or excuse me, days in the trade, DIT, same as in the Russell. This is up a little bit more money, which we would expect starting out with half the time in the trade. There's just 7 days in the trade. So again, in your trade plan, you want to have in there, if I get in this situation, is this profit target? I've made 15% on actual risk, maybe a little bit less on if I had a planned capital of 25,000. But you might want to continue to play this out. You know, the market's still consolidating. I might want to protect profits again. I might want to take this into expiration. It all depends on your objectives.
Mm-hmm. Right, and you would adjust according to whatever those objectives are.
Right. So, you know, if you think the market's going to take off, for instance, we'll do a risk-off strategy, which, you know, this would be an extreme example. Notice how it takes.
If you want to cover some of your downside risk, you do that on the way, right? And
that lifts this up. You might buy a put down here to protect downside. You might roll the lower longs up to take the risk back out to the downside. It's just any number of things you might, I don't know, you could roll these shorts up. I mean, it's just endless the things you can do, but understanding what the trade-offs for each is what's critical.
Absolutely.
Okay.
All right. Well, I'm going to hand it back to me now. So I'll quickly talk to you about how you too can gain these insights. So with our Broken Wing Butterfly Master Course, we're going to be covering in detail trade entries. We're going to answer the questions I'm commonly asked over and over again when it comes to broken wing butterfly trade styles, such as what's the difference between entering closer to expiration versus further expiration? What factors should I consider when choosing wing widths? What are the benefits and drawbacks of a broken wing butterfly versus say a butterfly call structure? Where should I enter my broken wing butterfly position relative to at the money? When should I scale into my trades, or when should I enter them all at once, right? Because we also have different types of entries. We have scaling entries, and we have entries that scale in through time and through price movement and into different expiration cycles. What are the drawbacks and advantages of doing all those? We teach you about upside adjustment strategies. We talk about multiple upside adjustment strategies, how they react, and what types of markets they're best suited for. We go into detail about multiple downside adjustment strategies, how and when to adjust to the downside for maximum protection with the least amount of whipsaw risk. We can see this a lot in the marketplace. We get these really big down moves, we make our adjustment, and then we get whipsawed and we lose to the upside, right? So how do we avoid that? How do we become more dynamic in that manner? We talk about how to set risk parameters such as profit targets, max losses for different types of objectives and different types of planned capital, depending on your entry and adjustment strategies. And then there's perhaps the most important aspect of all, and that's exits. So many traders ignore exits. They work with a profit target or a maximum loss, and that's it, or maybe a date. That's their only expiration strategy. And even in a lot of our strategies, according to the official guidelines, that's what we have. But the reality is your trade exits are usually where you make your money. I mean, most of the time we enter into the market, and the vast majority of the time, our trades are up money at some point during the trade. There are optimal times to exits. There are warning signs. You want to make sure you know when and how to exit most effectively. That's going to improve your trading drastically. And then finally, we have this special bonus video, which is to be released in April. It's going to be our 2021 update. It's going to answer questions from students in the course, and as well as general questions that I've gotten since the course has been produced about broken wing butterflies. So if you go through the program, you have any questions at all, you can send them in, and we can answer that in the update. Also, I'm going to provide new delta limit guidance for the new implied volatility environment since Corona. And then also, we're going to talk about calendar adjustment strategies for broken wing butterflies, which have been extremely effective lately. And I mean, we had just some killer good trades in the pro membership playing with these calendars on broken wing butterflies. So I want to share that experience with you and how to do that most effectively. So the current retail price on our broken wing butterfly course is $11.95. We're going to be increasing the price. It's going to be $1,295. Now, we're having a special sale on it right now for anybody who would like to improve their trading, and that is going to be for basic non-members or non-members. It's going to be $10.95. For Go, Trading Performance, and Market Outlook members, we're going to give you a $300 discount to $9.95, and for pro members, only $895. So a fantastic opportunity to get this course. Now, in order to get started, for our non-members, you just go to lockingyoursuccess.com, look at trading courses. This is a trading performance course. It's not a trading strategy course, right? We talk about broken wing butterflies and how to improve your performance with broken wing butterflies. We're not talking about a specific broken wing butterfly strategy. For our members, you just go to your Go Pro Market Outlook or Trading Performance dashboard within the community, and you click on discounts. So I'll just quickly show you where that is. So if you're a non-member, you come into trading courses. It's a trading performance course. It's a broken wing butterfly master course. And you come up into here, and you can do here. You can do this if you're a Go or Pro member also, but this here will get you to where you want to go. You click your membership level to buy, and we'll go there. And then if you're a member, you can come in to the community. You can go to, say you're a pro member, you go to your dashboard and you look for discounts. And we click in on discounts, and that will bring you to your special deal right here. All right, so that's what we have for you. I'd like to thank Stephen for a great presentation you did and helping explain the program. And I'd also like to thank everybody else for being on the webinar with us. I hope you take advantage of this special offer and you drastically improve your trading. Any comments, Stephen? Or?
Yeah, I appreciate the opportunity to share this with people. Again, I think it's so foundational. Everything stems from this, and no matter what you do, trade well.
Excellent. So we have a comment. Let me just see what we have for comments. Okay, great. Thank you. All right. So just thank yous and great presentation. I thank everybody for joining us, and we look forward to seeing you in the future. Thanks, everyone.